SCHD down 8%? Harry invested $50K in SCHD during dips and made 86%. Here's how. Is the recent market sell-off causing you to panic? With SCHD stock price down 8%, many investors are questioning their dividend strategy. But what if I told you that these drops might actually be signaling your next big buying opportunity? Welcome back to the channel, everyone. Today, we're doing something different. We're following Harry, a smart investor who recognized that market downturns are actually perfect opportunities to build wealth. Instead of running from volatility, Harry embraced it, strategically adding to his SCHD position during 5 major corrections. The results? Life-changing. So, before you panic sell your dividend ETFs, let's see what SCHD performance history tells us about buying when others are fearful. Understanding SCHD's fundamental appeal. Before we jump into Harry's investment journey, let's quickly understand what makes SCHD worth considering during market downturns. The Schwab U.S. Dividend Equity ETF has consistently delivered for income investors by tracking the Dow Jones U.S. Dividend 100 Index. What makes it unique is its focus on quality. It doesn't just chase yield, but seeks companies with strong fundamentals and consistent dividend histories. The current sector allocation shows meaningful exposure to financials: 17.82%, healthcare; 17.66%, consumer staples; 14.91%, energy; 11.86%, and technology; 10.59%. This diversification has been crucial to its recovery pattern during previous corrections. With a current SCHD dividend yield of 3.49% and a remarkably low SCHD expense ratio of just 0.06%, it's easy to see why SCHD remains a cornerstone of many dividend portfolios. Harry's first investment: the 2015-2016 correction. Harry's journey began during the 2015-2016 market correction, triggered by concerns about China's slowing economy and plummeting oil prices. Between June 2015 and February 2016, SCHD dropped approximately 13.2%, bottoming out at $33.70 per share on February 11, 2016. While others were panicking, Harry saw opportunity and invested his first $10,000. At $33.70 per share, Harry's initial investment bought him 296.7 shares of SCHD. The dividend yield at this point had risen to approximately 2.95% due to the price decline. In the 18 months that followed, SCHD returns delivered a remarkable 31.8% price appreciation, with the share price climbing to $44.42. Additionally, Harry collected about $526 in dividends during this period. By August 2017, Harry's initial $10,000 investment had grown to $13,706, $13,180 from price appreciation plus $526 in dividends. Instead of spending these dividends, Harry reinvested them, purchasing an additional 12.3 shares at various prices during the recovery, bringing his total to 309 shares. Adding, during the 2018 December sell-off, the next major downturn came in Q4 of 2018, when fears about rising interest rates and trade tensions triggered a broad market sell-off. Between October and December 2018, SCHD dropped approximately 12.7%, bottoming out at $45.85 on December 24, 2018. Looking at his successful first investment, Harry decided to add another $5,000 to his SCHD position. At $45.85 per share, Harry's $5,000 bought him an additional 109 shares, bringing his total to 418 shares. The dividend yield had increased to approximately 3.10%. Over the next 12 months, SCHD surged by approximately 27.3%, with the share price climbing to $58.37. During this period, Harry collected about $740 in dividends. By December 2019, Harry's total investment of $15,000 had grown to $25,388, $24,398 from share price appreciation plus $990 in accumulated dividends. After reinvesting these dividends, Harry owned approximately 431 shares. The COVID crash opportunity. The COVID-19 pandemic triggered one of the fastest market crashes in history. Between February and March 2020, SCHD plummeted by approximately 35.1%, bottoming out at $40.88 on March 23, 2020. With stocks on sale, Harry invested another $7,500, purchasing 183.5 additional shares at the bottom. His total investment now stood at $22,500 with 614.5 shares. The dividend yield had spiked to approximately 4.20% due to the sharp price decline. What happened next was extraordinary. In the 12 months following the March 2020 low, SCHD delivered an extraordinary 68.4% price return, with shares rising to $68.84. During this period, Harry collected approximately $1,548 in dividends. By March 2021, Harry's total investment of $22,500 had ballooned to $44,748, $42,302 from share price appreciation, plus $2,446 in total accumulated dividends. After reinvesting these dividends, Harry owned approximately 640 shares, navigating the 2022 bear market. In 2022, inflation fears and rising interest rates pushed SCHD into another significant downturn. From January to October 2022, the ETF declined by approximately 15.9%, bottoming at $68.50 on October 12, 2022. Harry, now convinced of his strategy's effectiveness, invested $12,500 more, purchasing an additional 182.5 shares. His total investment now stood at $35,000 with 822.5 shares. The dividend yield had increased to 3.65%. Over the next 12 months, SCHD delivered a return of approximately 22.1%, with the share price rising to $83.63. During this period, Harry collected about $2,461 in dividends. By October 2023, Harry's portfolio value had grown to $71,458, $68,584 from share appreciation, plus $2,874 in total accumulated dividends. After reinvesting, Harry owned approximately 857 shares. The 2023 summer slump, Harry's largest investment. Our final example is the 2023 summer slump. Between July and October 2023, SCHD experienced a decline of approximately 10.3%, bottoming at $71.20 on October 27, 2023. Harry made his largest investment yet, adding $15,000 and purchasing 210.7 additional shares. His total investment now stood at $50,000 with 1,067.7 shares. The dividend yield was approximately 3.55%. In the 6 months following this correction, SCHD returned approximately 20.8%, with the share price climbing to $86.01. During this short period, Harry collected about $1,136 in dividends. By April 2024, Harry's total portfolio had grown to $93,012, $91,836, from share price appreciation plus $1,176 in new dividends. His total accumulated dividends over all periods now reached approximately $8,132. After reinvestment, Harry owned approximately 1,080 shares. Harry's complete portfolio journey. Let's summarize Harry's remarkable journey with SCHD investing. Total invested, $50,000 over 5 separate market downturns. Current portfolio value, $93,012. Total shares accumulated, 1,080. Total return, 86% including price appreciation and dividends. Total dividends received, $8,132. Current annual dividend income, $3,769, $314 monthly. This represents an annualized return of approximately 13.4% during a period when many investors experienced significant volatility and uncertainty. What's truly impressive is how Harry's strategic approach of buying during downturns maximized his returns. Had he invested the same $50,000 as a lump sum at the beginning, his results would have been significantly lower. Future projections. The power of compounding. So where does Harry go from here? The power of compounding is just getting started. If Harry simply holds his 1,080 shares of SCHD for the next 5 years, and the fund continues to deliver its historical average return of 11.3% annually with dividends reinvested, his portfolio could grow to approximately $159,000, generating $5,554 in annual dividends, $463 monthly. Extending to a 10-year horizon, his portfolio could potentially reach $272,000 with annual dividends of $9,504, $792 monthly. And if Harry maintains his strategy for SCHD long-term for 30 years, his portfolio could grow to an astounding $2.18 million, potentially generating $76,300 in annual dividend income, $6,358 monthly. This is the power of buying quality dividend ETFs during market downturns and letting compounding work its magic over time. What this means for your portfolio today. So what does Harry's journey teach us about the current market situation? With SCHD going down currently experiencing a 2% drop and broader market volatility, history suggests this could be setting up another buying opportunity for long-term dividend investors. Let's consider some key takeaways. SCHD has consistently delivered 20% plus returns, following 10% plus declines. Market corrections have historically offered better entry points for long-term investors. Reinvesting dividends during downturns supercharges long-term returns. The fund's quality focus helps it recover more robustly than many alternatives. While past performance doesn't guarantee future results, SCHD Holdings' focus on quality dividend payers with strong fundamentals has proven resilient through multiple market cycles. Conclusion and action steps. Harry's story shows us that market volatility isn't something to fear. It's an opportunity to accelerate your journey to financial independence. Here are 3 actionable steps you can take based on today's analysis. Consider setting aside correction cash, specifically for investing during market downturns. Focus on quality dividend ETFs with proven recovery patterns like SCHD buy or sell. Decisions should be based on long-term goals. Always reinvest your dividends to maximize the compounding effect. If you found this data-driven analysis helpful, make sure to hit that like button and subscribe for more evidence-based investment insights. Are you buying more SCHD ETF on these dips? Let me know in the comments below. Thanks for watching, and I'll see you in the next video.